Hey, what's up, everybody? This is the Swinging Bull here with PB Alerts, and today's stream, just wanted to go over some trading tips, maybe some tools you can use and that you can put in your toolbox, and different things. Like I wanted to go over some trading psychology, and also buy-in method strategy, that kind of thing. So the first thing I wanted to do was go to the heat map here. We'll look at how the market's been doing today. Obviously, we got a lot of red today. The SPY is down about 1% on the day right now. We got Microsoft down 2.33%, Google down 2.6%, Amazon down 4.3%, Tesla down 3.4%. These are very big companies that have a lot of weight in the SPY. So anytime we see these companies very red, we're of course going to see the SPY red, which is the SPY is down again 1% today. You see, if you're looking at my screen here, I got the 5-minute chart on the top. I got the 1-minute chart on the bottom. If you're using Webull, this is a pretty good chart setup here. And if you're using the desktop Webull app, you can easily configure these charts by going to this symbol up here at the top. You just click on that and you can set it up either charts on top of each other, or you could do charts side by side. So you can mess with the tool there. But I like this setup with the 5-minute and the 1-minute on the bottom here. So anyways, let's go back to the heat map. This is one of the tools I wanted to show you guys how to get. Very good tool to look at the heat map. Maybe 30 minutes to an hour after the bell rings, you can pull up the heat map and kind of see, where the market might be headed for the day. And this heat map here is for today. And you can easily add this heat map to your address. You can bookmark the URL here, which is just simply finviz.com/map, and that'll give you a quick access to the heat map. Another tool that you can add to your toolbox is sector information. Okay, so if you're looking at my screen here, you can add this URL to your bookmarks. It's barchart.com/stocks/sectors/rankings, and that'll give you the sector information for the S&P 500 index here. So another great tool I like to look at. I like to look at this throughout the day, and it kind of just tells us what sectors are running. And of course, this is for today here. Energy's up. I mean, energy's been up all year. We can even go to year to date here and look at, energy's up over 35% for the year as a sector in general. And then all the other sectors are in the negative for this year, as is the S&P 500 in general, down almost 20% for the year. So definitely in a bearish market this year so far. But just wanted to give you guys these tools here. So again, we got the heat map. So you can add this link to your bookmarks. We got the sector information. So you can add this to your bookmarks as well. And then also like looking at the economic calendar. And this shows us the different reports and meetings that are going to be going on for the week. Okay. And this is on MarketWatch. So marketwatch.com/economy, politics/calendar. So you can add this to your bookmark as well. And I like to pull this up on Monday, so I know what's going on throughout the week. This screen that's pulled up right now, this is for this week. And yesterday we had the goods numbers come out for durable goods, capital goods. They all beat the previous report. So for durable good orders was 0.4% was the previous report, and what was reported yesterday was 0.7%. So we did have a 0.3% increase in durable good orders. So that's nice to see there. One of the big ones from yesterday was the pending home sales. Believe it or not, even in this hot real estate market that we've been in, previous or pending home sales actually was on a decline. You could see from the previous report that was released from last month that pending home sales were down 4%. That's just because real estate values are really high right now. And of course, the mortgage interest rates increasing. People don't really want to pay extra for their mortgages as far as the increased interest rate. So they were on a decline. And the surprise from yesterday for pending home sales was we actually were up. So pending home sales seem to be rebounding from the little slump that they were in for the past couple of months. So those were interesting numbers to look at yesterday. And of course, when the pending home sales numbers came out, I immediately started looking at real estate stocks and stuff of that nature for opportunities. And then, of course, we got some things going on today. Got consumer confidence index that was released, and not really too important today. The main thing we need to keep in mind for this week is on Thursday. Okay, this Thursday, June 30th, 2 days from now, we do have the PCE inflation numbers coming out. Okay, so Thursday morning, 8:30 a.m. There's probably going to be a lot of volatility after these numbers get released and after the bell rings due to the PCE inflation numbers that are coming out. They're going to release the monthly numbers, the year-over-year numbers for the PCE inflation, and then the core inflation. So need to keep our eyes peeled to the news on Thursday morning for the PCE inflation numbers. And then of course, we're going to have the initial jobless claims come out as well. So Thursday is a very important day for the economic calendar. And again, you can just take this URL, bookmark it. And like I said before, I like pulling this up on Monday, because if I do get into a swing trade, of course, we're not swinging long swings right now, but I do still swing things for a couple days or maybe a week. If I open a swing play on Monday, maybe plan on selling by Friday or something. But if we get this, we look at the economic calendar and I do open a swing in the beginning of the week, well, we just went over that Thursday, the PCE inflation numbers are coming out. So it might be a good idea to take profit before these reports get released on Thursday. That way you can kind of, save, be safer with your trade. So 3 good tools to add, just some good tips here on some of the things that I look for before I start trading or enter positions and that kind of thing. Okay, then let's just go back to the SPY chart and we'll kind of watch this while I'm talking, because I did want to talk about trading psychology. Okay, very important topic. There's a statistic out there that says 90% of traders, especially day traders and that kind of thing, end up failing. And the main top reason why is the trading psychology. Okay, so we all know what the top emotions that traders feel. We all know what they are, and the main ones, in my opinion, are fear and greed, and then of course FOMO, which kind of goes into the fear, which is fear of missing out. So we want to be really careful with those emotions that every trader has at one point in time, especially the FOMO. And then, of course, the big one is the greed. You might already be in profit on a position, and instead of moving your stop up to at least break even to protect yourself, you might be just letting that position, go without any risk management to see if you can get more profit out of it. And we've all seen that a number of times in our positions where we'll be green, 10, 20%, and then instead of maybe capturing some of that profit, or at the very least moving our stop loss up to protect our capital, what we'll see is the very next day, we go from being green 20% to being red 20%. So those are the types of things that happen when we're not when we get greedy. So we got to try and keep our greed in check. Everyone's going to have greed. Greed is actually not really a bad thing in a small way. because what does greed do to us? Well, it allows us to get up in the morning because we're hungry, for whatever it is we're going to be doing, So greed on a small scale, greed is good. It does give us motivation to do things. But when you get too greedy, that's where the problem comes in. And that's where, like I was just saying, we have a position that's in the profit in green, and instead of using risk management, we get too greedy, and ultimately sometimes, a lot of times the position will go from green to red. So keep your greed in check. As far as FOMO goes, fear of missing out, we got to leave FOMO at the door, everyone. Okay, we got to leave that at the door. I know it can be tough, especially we see some of these pre-market runners, that are up, 100%. And then we kind of get some FOMO when the bell rings, maybe we can jump in and get a piece of it. But you got to be careful doing that, because just as much as they can go up, 100%, keep in mind that it can also sell off just as fast, if not faster. And if you're looking at my screen here, I'll even go to some of these pre-market gainers. Let's see, I'll go to pre-market here, and we can go ahead and click on here. So, a perfect example here, ENDP. Okay, it actually, we had a big run when the bell rang, but even in pre-market, I mean, this thing was trading around 30 to 40 cents, and even in pre-market, it went up to 46 cents. And then when the bell rang, just a monster run here. If you didn't get in on this play in the beginning, and let's say we're in real time here, and you pull this chart up, you got to be careful getting into positions that have already ran 100%. Okay, so you got to leave FOMO at the door. If you missed the play this morning, we just got to move on to the next play. Okay, we got to leave FOMO at the door. Don't have fear of missing out. There's always going to be another play that's going to run, and we just need to maybe focus on how we can get into these plays before they run. So try and leave FOMO at the door. Very important. You can get trapped in a position really, really quickly, and you end up holding a bag. So FOMO and greed, very important. Now, I wanted to go over some exercises that can improve your trading psychology. Okay, so it's a list of 5 things that I think we can practice on and continually improve on to improve our trading psychology. So the first exercise is we got to be able to clear our mind. Okay, so in trading, you need to be able to focus on lots of data in a fast moving market. You can't allow other things to distract you. So this is where, having a clear mind comes into play. Something that you can practice is, before you start trading, maybe start your day off by meditating. Some people like to meditate. Some people like to maybe just go for a short walk to clear their mind. Or maybe you can go to the gym, pump some iron or something, just any activity you can do that's going to help clear your mind before you start trading. And you'll notice it makes a difference, because the mind follows the body, right? And when you change what you're doing physically, your mind will reset. So if you just do little exercises before you start trading, or anything that fits your personality that helps clear your mind, just take, even if it's 15-20 minutes before the bell rings or something, do something that's going to help clear your mind, and you'll notice that you're going to make better decisions when you're trading. Okay, the second exercise for trading psychology I wanted to go over was visualizing your trades. Okay, sometimes the adrenaline is too much. We've all experienced that. You get a big win, you get a lot of adrenaline. Especially when you're new to trading, you might get overwhelmed once your hard-earned money is on the line. So we want to visualize the trades so we can prepare for the emotions of maybe getting overwhelmed or having too much adrenaline. So visualizing our trades is going to help us prepare. For example, athletes practice before they play. So we need to practice before we enter the trades. And how we do that is visualizing our trade. So we need to take time to imagine ourselves in different scenarios. You win trades, you lose trades, you break even on trades. We need to see what happens to our psychology when those things happen. Okay. Does your heart beat faster? Do you freeze up? A lot of traders sometimes freeze up, especially when a position goes against them. They kind of freeze. And when we visualize our trade, we got to know what our stop loss is. We should already know what that is before we go into the trade. We need to know what our stop loss is. We need to know what our take profit is. We need to know how much we're putting into the trade. So these are all different things on how we can visualize the trade and have risk management moving forward. So it's good to know how you might react when you're under stress. Okay. So, that way your body's natural reaction, it won't surprise you when stress hits. So that's all part of planning out your trade, visualizing your trade before you get into it. If you know how much you're putting into it, you know what your stop and your take profit is. Well, now we've just kind of visualized different scenarios on how the trade can work out. So as long as we can do that and once you do it so much, it's just going to be natural. Every time before you enter a trade, you're going to have your plan in place, and you're going to notice a lot less emotions are involved if you stick to the plan. And when you visualize the trade, you got to stick to what you visualize. All right. So it's always good to practice on that kind of stuff. The next thing that I like to think about is know why we trade. We need to know why. Okay. If you don't know why you want to trade, it's going to be hard to stay motivated when things get tough. So we need to figure out why we're trading. Is it for extra income? Maybe like a side hustle. Maybe you only want to make $50-100 a day, or maybe your weekly goal is, I want to make $250 this week, so that every single month I have an extra $1,000 in my pocket. And that's actually a very obtainable goal. $250 for the week. And if you do that every week so that you can have an extra $1,000 every month, I mean, $250 a week divided by 5 trading days, each week, you only need to make $50 a day. So if you can maybe make a plan, hey, I want to make $50 a day so that the end of every month I have an extra $1,000 that I can, help to pay my bills, or maybe suck that, maybe you do your $50 a day, and then every month you get $1,000, and then at the end of every month, maybe put that $1,000 into a retirement account and let it grow that way. So we don't always have to swing for the fences to have a solid plan on growing ourselves. Okay. So we need to know why we're trading. Again, is it for extra income? Is it freedom? Maybe you don't want to work the 9-to-5 job no more, and you want to be your own boss. Some people that's their goal. They want to trade so they have their freedom back. Maybe you want to make a little bit of extra money every month to pay off your student loans, or maybe to offset, the student loan payments you have to make, and then we can figure out a plan for that. So if your student loans are $500 a month, well, we want to make sure we can make $500 a month in extra income to cover our student loan payments, or maybe you're trading to build a nest egg, which is kind of what I was talking about before. If you can make $250 a week and end up being $1,000 a month, maybe we want to use that $1,000 a month to build a nest egg in a retirement account. So I was just talking about that. So the clearer you are about your motivation, the less likely you'll be to get in your own way. So having external goals is definitely a great way to stay on task, as long as you don't put too much pressure on yourself. Okay. So, another exercise I like to think about a lot is make your trades real. So what I mean by that is trading can feel a lot like buying stuff with credit cards. You never hold the cash in your hands, so the transactions don't really feel real. It's just a bunch of digital noise, right? So, it's the other side to that is not if you want to reach your goals. So there are many ways to remind ourselves that it's real money. Some traders put real dollar bills on their desks while they trade. It's just a good visual thing to look at. Um, that to keep us reminded that we are playing with real money here, because it's very easy to click a bunch of buttons on an order, a trade order. Just click a bunch of buttons, and you could kind of lose sight that, hey, we are trading with hard-earned real money here. So maybe put a real dollar bill on your desk, and that way it can remind you that we're not just here clicking buttons, but we're actually trading real money. So we need to make sure we remember that. The final exercise for the trading psychology that I use a lot is keeping a trading journal. So, I mean, I've said it before, and I'll say it again. This is the best way to keep track of your inner and outer game. So, some people like to write out their trading journals. Each trade that they take. Whether they stopped out or took profit, and you kind of keep a journal that way. Keep a journal with your entries. Did you add to the position? What's your running average as you're adding to a position, things like that. And that way you can go back through your journal at the end of the week and go through your previous trades of the week to see how you can improve. So whatever you do, just make sure you're tracking your trades, is to sum it up. So you can even do an audio or video recording of yourself on your phone. You can just do like an audio note message. I know a lot of the phones these days has an audio note message where you just push a button on your phone and you just make a simple audio recording, and you can say, hey, today at 11 a.m. Eastern, maybe I entered a trade on this ticker, and this is how much my first allocation was. Just kind of, you can keep an audio trading journal on your phone. You don't even need to write it out, right? Let me just go back to the SPY here because I was tracking the SPY. We alerted put options on SPY. Actually, Lee, Mr. SLP, alerted put options on SPY this morning, and I believe they hit like 100% profit or something, something crazy. So a lot of members took profit on that today. So I'm just kind of following the SPY because I do still have a put. I have a free runner. I did take profit. I bought 4 put option contracts. I sold 3 of them when I got some substantial profit, and I left 1 runner in there. So I'm just seeing, looks like SPY's hitting its head on this 20 EMA. And I might get some more profit out of my final runner. So anyways, that's why I got the SPY pulled up. So what I was talking about before with the trading psychology, just keep in mind everything I said. I am recording this video, so I'll post the link into the chats when I'm done. And that way, if you ever need some tips on trading psychology, rewatch this video and talk about those 5 exercises I just discussed. Number 1, clearing your mind. Number 2, visualizing your trades. Number 3, know why you're trading. Is it extra income, or you want to get away from the 9 to 5 or build a nest egg? Number 4, make sure you understand, make your trades real mentally. Instead of just clicking buttons, maybe put a couple dollar bills, cash on your desk to remind you we are trading real money. And then number 5, keep a journal of your trades. That way we can go back in time, look at the trades we've already done, and find room for improvement. Okay. Another thing I wanted to talk about was the buy-in strategy. Okay. Very important thing we need to keep in mind is how are we buying into these different plays. Okay. So let me just go to something I played before and kind of give you an idea of what we're looking for on the buy-in strategy. So yeah, no, here's a great example here on Blue Apron, APRN. So I got the daily chart pulled up right here. And I'm going to show you how I would buy into this play. Let me just take off the EMAs and yeah, I'll just take off all the moving averages. It looks like Blue Apron's doing good today, up 13%. But as a long-term, well, as far as the buy-in method would go, let's forget about the run that just happened over the past couple days, and we can obviously see a very visually obvious downtrend here. Let me make this a little bigger so you can see it. So let's forget about these green bars that popped to the upside of this downtrend. So let's say we pulled the chart up, and this is what it looks like leading up to maybe this low at 227. Okay, so I'll even put a vertical line. That way we know that we're just looking at the chart from everything left of this vertical line. So say we pull this chart up, maybe an alert comes out in the premium Discord, and it's on APRN, and we got this chart pulled up. So what we want to do as far as the buy-in method is, as long as the price action is below this descending trend line, we do not want to be putting too much into this position while the price action is below this trend line. So an example of a buy-in strategy, we'll call it the 25-25-50. And what that means is our very first entry is only going to be 25% of what we plan on putting in. Okay, so let's just take $1,000 just to pull a number out of the air. Your first entry should only be $250. All right, that's going to be 25% of the $1,000. And let's say APRN, say it got alerted like in this area around here, and it kind of hits a little bit of a bottom here. We say, okay, great, we're going to put our first 25% in right here. I can actually probably draw a little rectangle here. So let's say the alert gets alerted, and like right here. So we're only going to put 25% of our allocation in on this first buy. Okay, and then time goes on. You know, the purpose of this trade is we're waiting for the price action to break to the upside of this descending trend line. So as long as it's below this trend line, we're only adding small bits. Okay, so first buy 25%, and let's say we put our second. You know, some time goes on, a week or two goes by, and we hit a new low right here. This is a new low. Well, at this point in time, we can add in our next 25%. So now we're only in the trade 50%. We still have $500 on standby for our final buy. So me personally, we have our two initial entries, which were only 25% each. And you can even break it down further than that. Maybe do 10% buys. You know, maybe do a couple 10%ers. Say you did 10% here, 10% there. Well, that's going to leave 80% of your allocation as ammunition. You know, so we're not getting over allocated and getting emotional because we got too much money in the trade before we were supposed to. And the idea is very small entries while we're below the descending trend line. Once we get above the trend line, this is where we want to add our bigger buy. And as you can see, I'll even put the bigger buy like right here, right? So this could be let's say we stick with the 20-20 or the 25-25-50. So we got 25-25, and then we can put our remaining 50% big buy in here while we're actually buying into the momentum. This is where you want to put your bigger buy. You don't want to put it down here while it's below this trend line. You want to wait for us to start getting some buying pressure. As you can see from the volume profile, look at these beautiful volume green candles here. So this is where we want to put our bigger buy, and then the price action breaks to the upside of the trend line, and then we're off to the races. Okay, and as you can see, our 50% bigger buy is lower than our initial 25% entry. It's lower. So some people think, oh, waiting for it to break to the upside of this trend line, we're missing out on, I could have bought down here. Well, you could have bought down here with a big buy, but what happens if the stock doesn't break the trend line to the upside and keeps going down further? Now you're in the play 100% and we haven't even broken to the upside yet. Okay, so this is why we do this, because you don't want to be 100% into the play while the price action is still below this descending trend line. We've got to save some ammunition for when it does break out, because if you don't save ammunition and you're just buying the dips without any sort of confirmation that we have broken the trend line and you're 100% in the position, well, when it finally does break the trend line, you're not going to have any more money to put in. And, it's just, this is just a safer way to play so you're not over allocating. All right, so that's the 25-25, the bigger buy when we break the trend line to the upside, and then we're off to the races, and we should have some very nice profit by then. So pretty good example there about the buy-in strategy. Let me just go back to the SPY real quick because I do have an open position there. Let me get back to my watch list. SPY, there we go. Okay, yep, looks like SPY is trying to well, I'm on the daily chart. Let me go back down 5 minute here. No, yeah, it's still kind of hanging out here. Let me turn back on my EMAs. Another little tip here about the moving averages for anyone listening. I use the EMAs for day trading. Okay, exponential moving average. The exponential moving average, these moving averages get plotted out, and they're a little bit more reactive to the price action, to sudden price moves. That's why I like the EMA for intraday. Now, the moving averages, just the MA or the SMA, simple moving average, basically the same thing. They're kind of plotted out differently. They don't react to the price as much than the EMA does. So if you're looking at the daily chart or the 4-hour or even the weekly, anything that has a big time frame on it, we definitely want to make sure we're on the MA, not the EMA. And I'll even show you the difference here. There's the EMA, and I'll take it off. You can see the EMA is different. I mean, and there's quite a bit of difference here, especially in this 200-day moving average. So that's just the regular MA, the 200-day moving average on SPY. On the let's go to the daily chart. Actually, I do like the weekly better for explaining this. So as you can see, the regular moving average on the daily chart is at about, here we can just do that. Yep, it's right there. $341 is the 200-day moving average. Now, if I switch this to the EMA, now it's 355. It's a lot closer, right? That's because it's exponential moving average. We're supposed to be using this on smaller time frames. So just make sure if you're on a bigger time frame, most of the traders and investors, they're using the moving average, not the EMA. And then, of course, when we go back to the 5 minute, even the I'd say anything 15 minute and below, 15 minute, 5 minute, or 1 minute, we definitely want to take the MA off and put the EMA on. Okay, we want to be using the EMA on the smaller time frames here. So let me go back to the 5 minute on SPY. Got the 5 minute up top, got the 1 minute on the bottom, both SPY charts. The 5 minute's going to give you more of an overall trend. Maybe you wanted to swing this just for, it's kind of like a day trade, but maybe you wanted to open a trade in the morning with the plan to close it out in the afternoon. The 5 minute might be a little bit better to go by as far as overall trend for the day. And then, of course, if you're scalping, if you're day trading by scalping or playing momentum alerts, I think the 1 minute is the best chart for that, because with the scalping, we're in and out in 5 minutes or less, sometimes 10 minutes, sometimes just a minute or two. So the 1 minute's great for scalping, 5 minutes great for overall trend. So just wanted to give you a quick explanation about the EMAs versus the MAs. Okay. And then, of course, for day trading, I like having the VWAP, which is this orange line right here. If price action is below the VWAP, well, we could be bearish. If the price action is above the VWAP, which is this orange line, we could be bullish there. And I can even show you an example of a day when we were bullish. So here's a bullish day here, June 24th. So this was 4 days ago. As you can see, the bell rang 5-minute chart. Price action is above this orange line, which is the VWAP, and we basically stayed bullish the entire day. And then just to kind of explain the inverse, which is today's lots of selling going on today. Price action is below the VWAP. It's been below the VWAP all day. And of course, we've been trending down all day. So good tool to use there for the VWAP. Just some basic tips here for you guys. Another thing I was mentioning earlier is the trading plan. And this does help with the psychology part of it. But please, please, please make sure you know how much you're putting in to every play, what your stop loss is going to be, and what your take profit is going to be. Those 3 simple things right there is a good foundation for a plan. Okay. And also, if your plan for a specific trade was, I'm only going to put $500 total into this play. One thing you do not want to do is turn that $500 play into a $1,000 play because it's going against you. So you see what you did there. Initially, you were only planning on putting in $500, but instead of sticking to your plan, if the trade moves against you and stopping out, you say, well, I'm just going to put in another 500. And what you did there is you're starting to over allocate. Because you initially only planned on putting 500, the play went against you. You're thinking in your mind, oh, I'm going to try and save this, so I'm just going to double up. And now you've turned the $500 trade into a $1,000 trade. And what happens is if it continues to go against you, now the smaller loss you would have taken on the $500 allocation has just doubled, and now your losses will be doubled. When you should have just stuck to your plan the whole time and only allocated 500 for that play. So just be careful of that, okay? Be careful of deciding you're going to double up your allocation just because it went against you. That's not very smart there, okay? So we went over quite a bit so far. Went over some trading tools you guys can add to your toolkit, like the heat map, sector information, the U.S. economic calendar that I like to check on every Monday to see what's going on for the week. So 3 great tools there. We went over lots of trading psychology. Again, the 5 exercises I was mentioning earlier. And again, I have this recorded if you want to watch the trading psychology part later, just to kind of reaffirm to yourself what we need to be thinking about. And then, of course, I went over some moving averages and the difference between the EMA and the MA. See if we have anything in chat. Yep, looks like we got a couple questions here. DWR, yep, lots of good information. Thank you for the comment. I appreciate that. And again, this stream is just basic trading tips. I'm not going to go into too much detail. I want to try and keep it as basic as possible for people that kind of just need a foundation of where they can start. Do have another question here from Hunter Provost. Does that, so I think he's talking about the buy-in method, the 25, 25, 50. Does that apply to options as well? Great question, and absolutely. Now, there's different types of options traders. A lot of the day traders, they don't necessarily like having multiple buys in a day trade, especially options, because either the trade's going to work out or it's not. And we all know from options, especially when we're day trading options, that a play can move against you rather quickly. So personally, I don't really use the buy-in method when I'm day trading options. Now, I will 100% use the buy-in method on a long option swing or a leap. A leap would be a great example. Say I bought a leap for 2 years out, say it expires in 2024. 100% I'm using the buy-in method on that. I'm adding contracts slowly over time. And you could do your own buy-in method. Maybe it's 10 different 10% entries. So maybe you plan on putting in 10 contracts total on an option leap. And what you can do is over time, just add one here, one there, until and add them over time until you get up to your 10 contracts, and then you're fully allocated at that point. There are some day traders that do a buy-in method, and it's all going to depend on when you're entering the trade and where the support and resistances are. So if you do want to use a buy-in method, this is an answer specifically for a Hunter that just asked the question. If you do want to use a buy-in method for day trading options, what you could do is let me go to a good example where we kind of had a choppy day. Yeah, like kind of like yesterday, maybe. So what we could do is wait for the price action to break above the VWAP and break above these moving averages. And let's say we use the 25-25-50 method for day trading an option contract. Well, as soon as the price action breaks above the moving averages and the VWAP, let's just, for example, take 4 contracts that we plan on buying total. Well, your first entry could be 1 contract, okay? And then if we do get any pullbacks, this is where you could add a second contract. And then, of course, if it pulls back again, we could add the remaining 2 contracts. And then, of course, take profit at the top. Again, a lot of the option day traders typically don't use the buy-in method. They know how much they're going to allocate. It's kind of a one-shot deal. They'll go ahead and enter the position. There is no buy-in method, but they know how much total they are going to commit, and either the play works out or it doesn't, and their stop loss gets hit and they move on to the next play. But the buy-in method for long option swings and leaps, 100% use the buy-in method, and I do that as well, especially if it's a leap. I'm adding contracts slowly over time. Option day trading, not so much, because it's either you get it or you don't, because the premiums on the options move so quickly that trying to figure out when you're going to scale in might not work. Just depends on your style of trading. But hope that helped everyone. Great questions there. I appreciate everyone joining me. I'm going to go ahead and end the stream here, and if anyone has any questions afterwards, feel free to shoot me a DM, and I'll be more than happy to answer those questions for you. Thanks everyone, and I hope you enjoy the rest of the trading day. Have a good day. Thanks.